Good afternoon, ladies and gentlemen. My name is Kirsty McManus. I'm the National Director at the IoD in Northern Ireland. You're very welcome to our webinar on the impact of the coronavirus on the manufacturing sector in partnership with Tughans. Our webinar this afternoon features 5 experts in their field who will give you a view of the economy, both globally, nationally and locally, a sense of the situation in Northern Ireland, an update on employment law considerations for the manufacturing sector and mitigations, and how you can manage your cash flow and contracts during this time. Some housekeeping rules before we get started. Could I please ask everyone to mute their microphone and turn your videos off? And if you have any questions, can you please use the instant messaging function? If you can see the speech icon at the bottom of the screen, you can ask questions throughout the session, and we will have a session at the end of all the presentations to facilitate your questions. This session will be recorded and slides will be shared with all participants. So I'll kick off. Our first speaker is Parikh, our Chief Economist at IoD. Tej, you're very welcome, and could I now invite you to say a few words? Thank you.
Sure. Thank you, Kirsty. So I'm going to focus on the immediate impacts of coronavirus on the economy and businesses so far, and then I'm going to weave into looking at what we could expect in the coming months in terms of the recovery, and then what implications that will have upon business practices. So moving on to my first slide. So what I've put together here is a dashboard, basically, which will hopefully build up a narrative for what's happening in the UK economy at the moment. So starting in the top left, what we can see is most forecasts are saying that economic activity is going to contract in the coming months by up to a quarter. The OBR estimated that could reach up to 35%. And you can see in context, the financial crisis, which is that little dip there just around 2008, that was a 6% drop. So this is a recession on an unprecedented scale. And the OBR kind of said, it's pretty much concentrated in a number of key sectors. That's the arts, entertainment, leisure, food and accommodation, and tourism sectors are going to be particularly affected. And moving into the top right chart, you can see why. Consumer confidence has massively dipped over the last couple of weeks. And what we tend to see in most recessions is that as GDP falls, consumption tends to fall, but usually by not as much as the fall in GDP. And that's because people will always have some discretionary spending, and they'll always need to spend on essential items. What's unique about this crisis is, of course, that people are on lockdown. And so that discretionary spend and spending on fundamental necessary items will also drop. And so we are expecting consumer spending to fall by more than the size of more than the drop in the economy. And that's particularly significant when you take into the fact that consumer spending is around 60% of the UK economy. But moving into the bottom left chart, the reason for that reduction in spending isn't just because people can't leave their homes, it's also because a number of them are suffering from personal cash flow difficulties. We've seen a surge in applications for universal credit, and based on the initial indications, that could lead to an increase in unemployment from around 4% to around 9%. And the OBR says that could mean around 2 million people, 1.6 million to 2 million people could become unemployed as a result of the crisis. And that would be focused on sectors such as the retail sector, the hospitality sector, and also the recreation sector. But as much as people are getting unemployed, there's also the people who are furloughed who have 20% less income as a result of being on the government's job retention scheme. So disposable incomes will also fall. Now moving into the bottom right chart, this isn't just a consumer-led recession. And in the bottom right chart, we can see that a number of purchasing managers for manufacturers and in various other production firms are facing longer delivery times on their supply. We know supply chains have experienced a high level of friction as a result of the crisis. We also know that export demand and demand for UK products will also be cut, and that's partly because the IMF growth projections suggest that the global economy will shrink by around 3%, and that's due to a recession in essentially all advanced economies. Even China's growth is expected to drop to around the 1 to 2% mark, and this will have a massive implication on demand, particularly in the manufacturing construction sectors, and that will also affect our suppliers. But it's not just an issue of around trade, it's also investment. We know in a time like this where there's a high level of uncertainty, business leaders don't want to invest, but not only do they not want to invest, they can't even complete various capital projects. So, I mean, from this slide, what I want you to take in summary is that, three major components of demand is dropping. We have consumer spending, which is dropping, investment, which is dropping, and then demand for trade, which is also falling as a result of global conditions. But it's also, as the bottom right chart suggests, even if there was demand, suppliers are having difficulties meeting that due to production difficulties. But moving on to the next slide. Now, there's been a lot of discussion of how we get away from that trough in economic conditions I showed you in the last slide. Are we going to have a U-shaped recovery? Are we going to have a V-shaped recovery? Or is it going to resemble something more like a Nike tick? Now, what I like about this graphic, which I borrowed from McKinsey, is it kind of helps to really frame all the various scenarios. I'm just quickly running through how you should interpret this. From the bottom to the top, that's an improvement in the health response. So the top would be we have a 3-month lockdown, cases clear, and we go back to normal. The bottom would be an inadequate health response that leads to an increase in cases and more lockdowns. From left to right, that's the effectiveness, increasing effectiveness of the economic response. So on the left, you need to interpret that as an economic response that's insufficient and leads to an ongoing economic crisis, even in the financial sector, right the way through to the right, which is essentially a government supporting businesses through difficult times, but also stimulating the economy and accelerating the recovery. Now, whilst I showed you in the last slide that this is a recession on an unprecedented scale, the recovery will be quicker than the financial crisis. The financial crisis took around 5 to 6 years for the economy to get back to its original size. Most forecasts and scenarios suggest that the UK economy will return to the size it was before coronavirus in around 2 years. So you're looking at being back to the normal size at around end 2022. Now, there's obviously a lot of uncertainty kind of entrenched within that, not least what happens in terms of new virus cases and whether that punctuates our recovery and makes us go back into a lockdown. But really, I see there to be 5 key factors which will determine what exactly that slope, that return slope, would look like. The first is, to what extent does unemployment entrench in the economy? We know that people will most likely be able to go back into work in the retail sector and hospitality sector, but there will still be some long-term implications for people being unemployed in terms of losing income. Unfortunately, there will also be business insolvencies in the trough, and even as we recover, we need to ensure that businesses still have liquidity. Just because we've come out of a trough, it doesn't mean that businesses will necessarily survive. We need to support them through that curve upwards. That's the second factor. The third factor is, this could lead to a wholesale change in household and businesses' behavior. I can imagine risk appetite completely dropping, saving increasing, and our ability to kind of encourage people to go out and spend afterwards will also influence that slope. The fourth factor is our international conditions. As I said, the IMF are forecasting global economic growth to reduce. And I think, that will have a knock-on impact on trade and travel over the course of the next couple of years. And that will also affect how we recover. But of course, I think, really the last factor, and I suppose the most controllable one, is policy. It's important to remember that, we are currently on life support. And the next stage is to really kind of stimulate the economy back into life. And so the steepness of our recovery will also depend on the strength of policy. And I think looking at international best practice on this, France and Germany have a flexible working scheme where they allow workers to go on to part-time working. And that type of scheme during the crunch times might be easier to scale up than the UK system, which relies on furloughing workers and might be a little bit more inflexible. In Germany and Switzerland, they also have 100% loan guarantees, which could limit the amount of insolvencies that take place when the economy bottoms out, and that might help their recovery. In the US, there's a similar loan scheme where repayment is contingent on on the firm retaining its workers, and that might limit the downside of unemployment. But then there are also a number of informal examples of best practice. An example from the US is where the a lift sharing app, Lyft, is actually redeploying its employees to kind of provide delivery services for Amazon. So there are also kind of informal things that could help the recovery and help use resources most efficiently, which can affect how quickly we bounce back. But in summary, I think we will be looking to be in that quadrant of shaded squares in the top four, and I kind of outlined that there are a number of unknowns around that, and what we need to see from policy is really realizing that we can't just rely on helping businesses to tread water. We also need to kind of stimulate them as we come out of it. So there's going to be much need for more fiscal policy, despite the level of indebtedness that governments might get themselves into. Moving on to my final slide. Now, as we come out of the trough and into the recovery and then beyond, I think we're going to see a transition in the way businesses interact and organize themselves. The first key trend is around efficiency. So supply chains have been dominated by this just-in-time notion of importing and getting products onto the production line and out of the company. And I think given the risk environment we're in, there might be more encouragement to incorporating slack into supply chains and actually holding more inventory back. And also on the efficiency point, because a lot of businesses have been mothballing parts of their production and even furloughing staff, there's going to be a big question mark for business leaders on how they scale back up. And there's going to be a question around, okay, what are the most essential parts of my business and organization, and how do I scale up in a productive way rather than just opening everything else up in one go? And this is similar to the whole discussion around supply chains. I see, as I said, with the IMF figures, we might be seeing a movement towards regionalization, where we have, the producer and the buyer kind of coming far closer together. And maybe even businesses might try to reduce the risk and complexity in their supply chain by sourcing from multiple suppliers, or generally speaking, improving their ties with people in their supply chain and understanding the exposures that they have. I think that will be a key element of the recovery period, but also the new normal after that. The third factor is risk management. So I think this is really highlighted, whilst a lot of businesses like to optimize their cash flow and make sure all the cash flow is productive, there might be a push now towards keeping more cash in reserve. And I think that will be particularly important for the recovery period, where businesses will need to have a bit of liquidity in reserve if there might be a return, if there might be reinfections or a return to lockdowns down the line. And the last factor that I wanted to touch on is agility. It's more of a long-term factor, but I think what this has highlighted to a lot of businesses, particularly small businesses, is the importance of having diversification in your organization. I can imagine a lot of firms looking to move out of just being a one product firm or even a one geography firm to kind of spread the amount of risk. I can also imagine, because a number of businesses have seen how changes to the state of the world can impact their productivity, there might be a push towards tech and automation increasingly to encourage to act and to maintain some continuity in difficult periods. But I think above all, there'll be a new focus on horizon scanning and the role of looking forward. And I think constantly innovating one's own business strategy will be important, particularly with a new world in which consumers and businesses will be adjusting their behaviors. So I think that's it for me. I will hand it over, but I'm happy to take your questions later on as well. Thank you.
Tej, just one area, because I know obviously from your time in Bank of England, and I know you've been doing a lot of work around CBILS, and maybe give a highlight of something that maybe announced for the weekend, hopefully around CBILS intervention, if you can, that would be useful.
Yeah, so IoD recently, well, today we had a press release calling for vast improvements in CBILS. One of the announcements that we should be expecting is a move towards 100% guarantee, particularly for small firms. So at the moment we have an 80% guarantee. The challenge with an 80% guarantee is that there's a lot of underwriting and viability criteria being done by banks, which slows down the ability to approve loans. So we are hoping, we're seeing increasing appetite from the Chancellor that we might move towards 100%. But I think that is just one element of the policies we're hoping would be coming through. That there needs to be a wholesale look at the scheme. And I think we'll keep pushing around that.
Thanks, Tej. And just to remind anyone, if you have questions, please use the chat function. We have time at the end for questions and answers. So Tej, thank you very much for your presentation.
Thanks.
Our second speaker is Stephen Kelly, who is Chief Executive of Manufacturing in Northern Ireland. And Stephen, I know you've been very busy representing your members in manufacturing, and obviously keen to hear your view of the situation in Northern Ireland. So thank you, Stephen.
Thanks, Kirsty, and thanks to yourselves at IoD and Tughans for putting this on. And it's great to get the opportunity to wear a shirt and tie for the first time in about 6 weeks. Getting dressed up to go to work is a little treat for now. I thought I would start with kind of just looking at the Northern Ireland economy as a whole. And if you look at that top right-hand side of your screen, that production industries largely makes up about a quarter of the non-financial economy in Northern Ireland. So unlike other parts of the UK, manufacturing here is much more important to ensuring that we have jobs and exports and a source of income into Northern Ireland. Next slide, please, Chelsea. In terms of the contribution the sector makes, it's a £10 billion contribution, both directly and indirectly, to the Northern Ireland economy. And when you look at the jobs, both direct and supported, it means that 1 in 4 families in Northern Ireland depend upon a manufacturing wage today and indeed every Friday this year. That's a huge impact in terms of our economy and the health and wealth of our communities as well. Next slide, please. When you look at where the sector is largely based, understandably, and most people online will know that Mid-Ulster is the real beating heart of the manufacturing economy. But actually, Mid and East Antrim, Armagh, Banbridge and Craigavon, those areas are largely dependent upon the manufacturing community in terms of delivering jobs and bringing an income into those communities. Mid-Ulster alone, more than half the jobs there are dependent upon the manufacturing sector alone. With Armagh, Banbridge and Craigavon and Mid and East Antrim council areas having about 40%. So this is a particularly important part of the economy outside of our cities. Next slide, please. And we look at, and Tej referred to the financial crash that we did witness. And in many people's view, perhaps the manufacturing sector is a twilight part of our economy, but even just in terms of the return to work from the financial crash back in 2009, you can see there that manufacturing has actually delivered more of those new jobs back into the Northern Ireland economy, and largely in the full-time element as well. So despite the perception that we were a twilight part, we're actually the shining light in many respects of the economy. Next slide, please. And obviously, given the fact that we're a small regional economy, we're really dependent upon that external source of income in order to bring money in and through the rest of the economy. And unlike, again, the rest of the UK, our manufacturers dominate the manufacturing of goods and selling of goods, both to external markets and GB and also export markets, is absolutely critical to ensuring that we have that income in Northern Ireland. So half of all our external sales, so GB, is our manufactured goods. Roughly about 60% of our exports are manufactured goods as well. Thanks, Chelsea. So that's where we were, and where are we now? Well, I suppose the best definition that I can think of is that we're actually in a suspended economic emergency, whilst we're dealing with what's clearly a very difficult public health emergency. All the actions that have taken place by both the executive, but particularly the UK government, have largely been to avoid the economic pain for now, whether that's the investment of 80% of wages and furlough, whether that's some of the grants that have been passed to small businesses and including now some small manufacturers. We really don't know where we are until we get out of this public health emergency element of it. In many respects, it's like being thrown into a very deep pool, and we're busily, frantically flapping our arms and kicking our feet in order to keep our head above water. But it really won't be until we're able to place our feet on that solid floor of the pool or find where the sides of the pool are, will we be able to understand how we can press ourselves off or pull ourselves to safety. So as of today, we're really in a suspended emergency rather than in the midst of it. Next slide, please. And quite clearly, the introduction of the furloughing scheme, the job retention scheme, has been well received by manufacturers. When we surveyed members some 2 weeks ago now, 4 out of 5 had furloughed some of their staff. But when you look at the volume of the numbers of staff that were furloughed, you begin to see that the sector is largely closed. So 1 in 4 had completely closed, had furloughed essentially 90+% of their staff. 60% had furloughed more than 75, and 3 out of 4 more than 50%. So aside from those people who are offering life-sustaining frontline types of products, the rest of the sector has been largely closed. Next slide, please. And again. So the worry really is that, as the Chancellor had been making clear when he announced the furloughing scheme, that furlough is a replacement for redundancy for now, but that's not a replacement for redundancy for everywhere or forever. And what we've been trying to work on, and certainly work alongside Kirsty and other colleagues in IoD, we've been asking for both a restart and a rebuild plan. Yes, we're in the middle of the public health emergency. That is absolutely the #1 priority. But we should be preparing for people to return back to work, encouraging people in the community to understand that they will be called to return to work and that they're ready for that. But in addition to that, we need to get off the ground really quickly once we get through the public health side of this, so that a rebuilding plan is in place, that interventions are in place, and that people are supported to recover their markets. Next slide, please. So what support has been provided till now? Well, obviously furlough we've mentioned previously. The Minister, both Finance provided the money, and the Department for the Economy Minister opened up the small business grant scheme to micro manufacturers. So those with a rates valuation of less than £15,000 NEV are now able to participate in that grant scheme, and I know that a number of them have made those applications. Sadly, they haven't used the manufacturing industrial derating valuations, but instead the full fat valuations at this point. We're arguing with the department that really the NAV1 as it's known, or the derated value, needs to be used. Manufacturers have a lot of large spaces. Some of them are in old properties. Some of them need a lot of space in order to just move things around and do what they do. And unlike other parts of the economy, they can't commercialize every square inch of that property. So unlike retail or offices, they need big spaces, and a lot of those spaces are lying vacant or wasted. So the government back in 2007 introduced industrial derating for a good reason, and that was partly reflecting the scale and size of the spaces that were required. And indeed, even now, despite derating, manufacturers pay 50% more than any other parts of the economy per business on business rates. So we're asking the department to look at extending the scheme and then taking the derated valuation rather than the full fat one. We've also had the business rates freeze, and as well as a reduction in the regional rate for this current year. Unlike the rest of the UK, that rates freeze is only for 3 months. Certainly there's a demand in other sectors that would be extended to 12 months. We would take it. Every little helps, of course it does. But we particularly focused on those firms that the government are telling to close. We really think it would be cruel for those businesses that are forced to be closed for the government, by the government, that on another part of government would be demanding taxation from them. So we expect that there will be some movement in and around this business rate stuff again before this crisis is ending. And then last but not least is the civils money that Tej has already mentioned. Big challenge that we're finding is that banks are spending a lot of time pushing or trying to ensure that clients are able to take the bank's own product. That's understandable. Banks are businesses as well, and banks need to earn a margin also, otherwise they don't have money coming in themselves to cover their own costs. But certainly what we found is that well-run businesses are easily getting support from their own bank through existing borrowing and not being pushed towards the civils money, whereas businesses that perhaps aren't as well run or haven't been as well run over the years, they don't have cash sitting there, they don't have security, etc., they're getting greater access to the civils money. And that seems a little bit unfair to businesses. So we've been asking banks to be more flexible, more creative around how they construct the rescue package that a particular business may have in terms of the need for working capital. Next slide, please. And lastly, I just wanted to point to a couple of pieces of work. So the demand from the community and some of our politicians to create a list of what is essential business was taken on by the executive. They couldn't agree themselves. So they created a new workplace engagement forum that involves people from business, trade unions, public health agency, health and safety executive, labour relations agency, and others. And over a short period of time, in fact, within 1 week, that group had completed its work and passed the details on to the minister some 2.5 weeks ago. Last Friday, the minister announced that the executive had accepted the first piece of work, which the document to your right-hand side, which is a practical guide in terms of working, in terms of making workplaces safer. That's a guide that's been signed off by business, but particularly by trade unions, health and safety executive, and public health agency. So whatever your business is, do pick up that document. There's some really useful information in there, and we know that it's adopted by those public bodies and indeed by trade union colleagues as well. The second piece of work was the actual list itself, and rather than having an essential list, what was created was a list of priority sectors. Now, sadly, the wrong list was published on Friday night, but more particularly, the narrative around how the list should be viewed, how the list should be used by people in the workplace, by businesses themselves, wasn't published alongside it. We're hopeful that that is going to be published in the next number of hours, hopefully. That get through the executive later on today. But that'll give a greater, that will give greater clarity to both workers, businesses themselves, and others about how wide the priority list actually is, the things that we require in order to tackle this virus, to support the front line, and indeed to sustain life in a period. Why is it important? Maybe the environment has changed over the last couple of weeks whilst we waited for these documents to be published. Well, it has, but every indication is that this virus will return at some point later this year. So we need to make sure that that piece of work is done right. Otherwise, we may end up with a problem come the latter half of 2020. And the grip hasn't ended, so they've begun now work on a third piece, which is in and around the restart part. Yes, the department and the executive are beginning to consider what should restart look like, but we think that that work that they're doing would be greatly benefited by being informed from business, trade unions and others about how business can be safely restarted as well. So we're expecting that work to be concluded prior to the next review of the lockdown process, which is due out on the 9th of May. Thank you.
Stephen, thank you very much. Very important messages, and keep up the great work that you're doing representing manufacturing in Northern Ireland. So appreciate that. Our next speaker is James Donnelly, who's head of corporate at Tughans. And James, really keen to hear from you and get a sense, I suppose, from the bridge and what's happening in the M&A world. And, you know, is there still activity? And give us a sense of what's happening and maybe some of the opportunities, but also maybe constraints as well during this time. Thanks, James.
Yeah, thanks, Kirsty, and apologies everyone. I'm having difficulties with the video link here. So, yeah, head of corporate at Tughans. I'm actually not going to say an awful lot. I have got after this Anna Beggan, who heads up our employment team, and Andrew Kirke, director from our commercial contracts team. I'm just very conscious that those sectors are clearly very hot at the minute, and people will want to hear the detail of what's going on there. My work, corporate transactions, M&A, funding rounds, shareholder reorganizations, etc. So, I mean, in terms of an overview, you know, lawyers are probably good at telling people how busy they are. Of course, deals have fallen. And of course, deals have been put on hold, but there is, you know, there is a certain level of corporate activity ongoing. Parties that have been in discussions at present are very keen to let each other know that they're still interested. They're still keeping, in some cases, documents moving. But nobody can, or people are reluctant to commit to a completion date. We have new instructions for new acquisitions, which is positive. And again, a large part of our work is dealing with VC funding rounds, and some of the local funds, TechStart, etc., are still doing transactions and completing transactions. So positive. A lot clearly depends on the lockdown and what that looks like. Stephen talks about the need for a restart plan, and you know, I agree with that. That's what gets people back to making decisions and to looking forward at things. I think it's probably easy to see what you want to see. You know, in real time, this week probably had a greater sense of activity or business about it. Perhaps people's 31st of March year end, perhaps Easter week over, headlines talking about creep back to work. It's hard to tell. In reality, there will be a dip. The things Tej talks about, the wider global recession, and of course that has knock-on effect here. It's difficult for any transaction that involves value, which they all do. When people are trying to pinpoint what a value is, it's just clearly very difficult to do that. Things move slowly when people are working remotely, and also and as much as anything, the practicalities of doing a deal in the current climate. You know, doing due diligence on site. Yes, we're all geared up to deal with things remotely, and we can make, you know, really good progress with that. There's technology to allow for remote signing and execution of documents for large transactions. But the reality of closing deals is often that there needs to be a transition period, there needs to be handover meetings with teams, etc., and that just can't happen at present. The restart plan is important. Tej was reasonably positive, I think, in terms of the recovery might be quicker than the previous downturn. So we will see. I suppose at present we look to the positives. We have teams here that are very busy at present. Anna's team in employment, clearly. Andrew's commercial contracts team, our banking team, property, dealing with lots of property type issues. And I think there was an IoD seminar on that last week. But equally, our clients and sort of the wider companies here, have to look for the opportunities. Our client Randox leading the way in terms of testing, block blinds, turning its attention to PPE. We see the O'Neill's story, and food companies that we act for going strong at the minute. I think Tej also mentioned innovation, and that's the theme that comes back to us. We act for Tesco, and already an innovative company, but the levels of innovation going on within that company over the last weeks has probably been more than the last number of years, and so innovation will be something positive that comes out of this. So Kirsty, that's a high level feel of what things look like, but as I say, I'm conscious that people will want to hear the real feel behind employment type issues.
Thanks, James, and thanks also for highlighting some of those, examples locally of manufacturers in particular who have pivoted, such as O'Neill's. I think it's important to promote that. Our next speaker, as you'll see on the slide, is Anna Beggan, who's Head of Employment at Tughans. Anna, you're very welcome. I appreciate this is an extremely busy time for you and your team, and obviously a view from the bridge, really, around what some of the issues and considerations for manufacturing firms at the moment, given the JRS and many other aspects.
Okay, thanks. Thank you, Kirsty, and good morning, or I think it's afternoon at this stage, everybody. Yes, I'm going to speak in a little bit more detail about the job retention scheme, and it was interesting, Stephen, you've indicated that 81% of the sector have furloughed employees, so obviously everybody's familiar, certainly to a certain extent, with the job retention scheme. Now, this was a very hastily drawn up scheme, and the detail of how it's to work has been provided in a piecemeal fashion. And I think since the scheme was launched about a month ago, there have been, I think, about 7 updates, 3 of which have been produced since last Friday. So obviously a lot of clarification was needed, and a lot of clarification has been given. The big news is that the HMRC application portal went live this week, and some interesting statistics. I think there was apparently something like 60,000 claims in the first 30 minutes and over 140,000 applications on the first day. Now, the good news is that the feedback has been positive. I think there had been some concerns that the scheme may crash because of the number of applications, but there doesn't appear to have been any significant issues. Obviously, we're now all waiting to see how quickly the money reaches the employers' accounts, and that's due to happen shortly. I thought what I would do is go through some of the clarifications on the scheme, and particularly those that have been most recently made. In terms of eligibility, the initial qualifying date by which an employee had to be on the employer's payroll was the 28th of February, and this has now been extended to the 19th of March. So that really brought into the scheme a number of employees, really new starts, who wouldn't have initially qualified for furlough. The potential catch is, though, that the employer has to have submitted real-time information to HMRC to their payroll data by the 19th of March. So I think there's a possibility that in practice, many new starts might still not be eligible, especially if they're paid on a monthly basis. So that's just something to keep an eye on. In terms of scope, and I think as Stephen referred to, the scheme was designed, as the name suggests, to protect jobs. but it's not restricted to potential redundancy situations. On the 15th of April, the HMRC gave further detail on the operation of the scheme, and it clarified that an employee can be furloughed by reason of other circumstances arising as a result of coronavirus or coronavirus disease. So for instance, if there are employees who need to be at home because they're shielding, then those employees can be furloughed because they're shielding under the public health guidance. If there are employees who are unable to work because they've caring responsibilities due to coronavirus, then they can also be furloughed. So there was obviously a broader approach was taken by government as the scheme has developed. And then last Friday evening, the scheme was extended from the 31st of May until the end of June. Now, I think that was in response to pressure from businesses who otherwise might have had to start their redundancy consultations to comply with collective redundancy rules if they'd planned to make redundancies when the furlough scheme was initially to come to an end at the end of May. One thing in Northern Ireland is I think employers here should keep collective consultation periods in mind if they are considering redundancies, and there is a difference in Northern Ireland compared to the rest of GB. So the collective consultation periods in Northern Ireland, and in both GB and NI, where 20 or more redundancies are proposed, then consultation should take place at least 30 days in advance. But in Northern Ireland, where more than 100 employees are affected, then consultation must take place at least 90 days in advance compared to 45 days in GB. Now, I do know from speaking with other employers there has been some confusion about the collective consultation periods here, and I also know that more generally, and I know IoD have been possibly involved in this in the past, that there is a question, there's a broader question as to why there's a difference in NI and GB, and I know that that's an issue that had been considered pre-coronavirus. One of the other changes has come, and I think this was causing some confusion, was around the issue of consent, and there was a tension between the Treasury's directions to HMRC and then the guidance, which really shows how HMRC intend to interpret and apply the direction. So the clarity around this is that initially the direction seemed to require that employees would agree to cease all work in writing. And then the guidance stated that written agreement from the employee is not necessary. And I know maybe it's just us as employment lawyers, but there was consideration around the clear tension in this. But HMRC have now stated that employers should follow the guidance. And where you are, it's crucial that the employer and the employee must reach an agreement, and an audible written record of this agreement must be retained. So it doesn't necessarily follow that the employee will have provided written confirmation that such an agreement was reached in all cases. But so it's a clear statement from HMRC that they will not deny the employer the ability to reclaim funds simply on the basis that the employer has not obtained written agreement. But again, you need to have shown that this has been agreed, that there is something in writing in terms of the audit trail. So that was a welcome clarification, particularly when if you had a right to lay off in your contract, there wasn't the same requirement to get consent where you didn't have the right to lay off in your contract and you had to get some written agreement to the variation of the contract. Then more generally, in relation to holidays, again, this was another hot topic, and their clarification really hadn't been given on this until very recently, but HMRC have now clarified that an employee can take holiday during furlough and they can continue to accrue their holidays during furlough. So that doesn't stop employers claiming under the scheme, but one thing to note is obviously that annual leave must be paid at an employee's normal pay rather than the reduced furlough rate. So if employees are taking holidays, then you would need to top up their pay to 100% in respect of any time on annual leave. Of course, that doesn't stop an employer reaching an agreement with their employees when they're furloughed, really on their holiday entitlement and indeed on their pay. But you would have to bear in mind that there are minimum payments required in respect of holidays. So again, something to look at. There is one caveat, however, on holidays. The government have said that they're keeping the policy on holiday pay during furlough under review. So there is a possibility that that position might change. Just more generally, directors' duties. I think this is maybe one aspect whereby there might have been some hiccups with the payments onto the portal insofar as directors are not necessarily in normal payroll runs. And obviously directors have fiduciary duties as directors, statutory directors, and then they will have duties to companies. So the company directors who are paid through PAYE can be furloughed, but during furlough, they must only do what can reasonably be judged as necessary to fulfil their statutory duties. So for instance, they can't work or generate revenue or otherwise support the company, but they can consider what they might have to do in order to abide by their fiduciary duties as a director. Normal wages, the reclaimable amount is limited to any regular payments that you're obliged to pay to your employees. HMRC has clarified that the 80% figure can include wages and other such things as non-discretionary fees, commission payments. It's really what you generally pay to your employees, and indeed overtime can come within that. But the scheme doesn't cover discretionary payments or benefits in kind. There has been this further clarification is helpful. I know I've been involved in some discussions around payment of overtime, and particularly because the scheme came in such haste at the beginning, I'm not sure that overtime is taken into consideration. And of course, there may well be employee relation questions if some employees are working and not getting overtime, but those on furlough can get overtime. So again, matters to consider. Sick pay, again, clarification has been provided on that. HMRC has now confirmed that employees cannot be furloughed and paid sick pay for the same period. So your employees are either on sick leave or they're on furlough leave, but they can be furloughed once they stop receiving SSP, or indeed if one of your employees falls ill during furlough, they can be placed on SSP or they can be kept on furlough, provided of course that furlough rate is above the SSP entitlement, and you know, that applies in any circumstances. Now, just generally, in terms of audit, records are to be kept. We don't know at this stage the extent of any audits. I think in relation to employees who are shielding, some issues have arisen. I don't know if any of you have come across this, but if you have got an employee who's furloughed because they're shielding, you would need to get a copy of the letter that you've got from their GP, so that if there's any issue down the line, you've got that for audit purposes. And I know certainly sometimes employees have come back when there is a requirement to provide that sort of confirmation as to why they're on furlough leave. Those are the recent changes. HMRC seem to update their scheme on Friday evening, so I would suggest if there are any changes, they're probably going to come out later on today. And then briefly looking ahead, I know once restrictions begin to ease, and Stephen, you've referred to this and you've talked about the restart and rebuild programme. Employers are concerned obviously that their businesses won't be able to pick up just you know, from the pre-coronavirus position of this as if nothing has happened. Employers are obviously going to require some flexibility at that time. I know the IoD have been involved in discussions with government about the need to maybe have some sort of tapered relief as we re-emerge from, you know, from this crisis into a period of business recovery. There might well be a further extension of the job retention scheme to allow employees to return to work. I know certainly employers are now beginning to think about that. What can they do to avoid even having to make redundancies at the end of June? There will be legal considerations which you will need to consider at the time. Get confirmation in writing that furloughs come to an end. There's obviously going to be further clarification and advices in relation to additional, you know, distancing measures when we come back to work. You're going to want to keep your options open if you need to re-furlough. And there's also, of course, the potential of some reluctance from employees to come back. So all issues for the future. And hopefully if there's any questions at the end, but really that's it, just in terms of the recent developments and the recent clarification that we've been given on the scheme.
Thanks, Anna, and you can breathe after that. So that was a very good comprehensive round-up. No, thank you. Thank you. And our final speaker is Andrew Kirke, who's the Contracts and IT Director at Tughans. And Andrew, I know you say cash is keen, so obviously keen to hear from you around some of the support measures and strategies that are available to the manufacturing sector during this time to keep cash flow. So over to you, Andrew. Andrew, are you there?
Hi, yep, can you hear me?
Yes, can hear you now. Thanks.
Sorry. Yeah, so I suppose we're just conscious of time frame. I guess like really only 10 minutes more for the webinar, so just going to be a quick high-level overview from me. But yeah, as James said, interesting to see. I suppose on the positive note, there've been a lot of negatives around the current situation, but on a positive note, it's been good to see some of our manufacturing clients pivoting to meet demand over this period. So some of the contracts our department has been involved in helping clients negotiate included the contract Randox have had with the relevant government departments for testing of NHS key workers. We've also been involved in helping Block Lines negotiate a contract for manufacturing of PPE. So it's been interesting to see some learnings from that in terms of government approach maybe being slightly more flexible to procurement than would apply ordinarily. So that has been encouraging. It's been good to sort of work through those. I suppose obviously that pivoting and the new work that they've been involved with has brought its own challenges in terms of making sure that if companies are getting into new supply lines or providing new services, that they have adequate insurance cover for that. And that's not something sometimes that comes to mind if you're pivoting to meet demand quickly. But that's something that our clients have had to deal with in terms of ensuring that their existing policies are adequate to cover or getting extension if they need to. Also, clients have been having to navigate the regulatory framework in terms of getting themselves up to speed with what's required from in terms of how those requirements have been applied, which has been encouraging. In terms of other issues around cash flow, so obviously that has been a major concern for businesses in the current climate. And with courts currently being closed, obviously there are no immediate options to businesses in terms of legal remedies. But that's not to say that letters of claim can't be sent. There are obviously going to be, in most commercial contracts, insurance clauses that allow your business to recover insurance at whatever the pre-agreed rate is in the contract. So that's something that the businesses should be looking to leverage if they think that their customers are being unreasonable on payment terms. And then obviously there's a right for statutory rate of interest at 8% plus base if you were subsequently able to bring a claim against a successful claim against a customer with outstanding debts. I think some businesses have obviously been looking to work with their customers as well in terms of accelerating cash flow. So perhaps if your customers are in a better position cash-wise than your business is, I know that there have been a number of discussions taking place with some of our clients, particularly with their customers in the public sector, and got helpful. There's been quite helpful government guidance that's come out actually in terms of how those public sector bodies are to assist and identify at-risk suppliers and to potentially look at options like increased or better payment terms where that's a realistic possibility. Also with suppliers, so obviously payment of suppliers is going to be a key issue as well, and having early conversations with suppliers to see what you can do there from the other perspective is going to be helpful. Another key issue has obviously been force majeure. So, I mean, a lot of our clients have been doing a contract audit to look at the contracts that they're able to comply with at this time and those that they may have issues complying with due to problems with supply chain, etc. So, I mean, I think it's important to stress that it's not a given that if your business isn't able to comply due to factors that are outside your control, that necessarily performance under the contract. So it's important for all businesses to be looking to their contracts, identifying anything that they're going to have issues with performing, or equally where there's going to be issues with performance on the other side, and looking to whatever the relevant force majeure provisions are in that contract, if any. So there are obviously legal formalities that need to be followed around force majeure, and there's no set or predefined arrangement for force majeure. That it really depends on whatever has been negotiated in the individual contract. So I think it's important for businesses, if they're in any doubt, particularly on high value contracts, to be reaching out to in-house legal counsel or external legal counsel to get a bit of a steer if they need one. Obviously, if there are no force majeure clauses in the contract and non-performance is going to be an issue because of specific issues related to COVID-19, then you're looking to frustration, which is a common law doctrine, but the scope to excuse performance under the common law is a lot more limited than it would be typically in a force majeure clause under a commercial contract. Outside of that, I suppose, just at a high level, other departments, things that they have been looking at that we haven't touched upon here. We're having a lot of conversations with clients at the minute around C-bills and perhaps the difficulties that they've had negotiating that. I know Stephen and Tej have touched on that helpfully already. I think it's very encouraging to hear that the government might be potentially guaranteeing 100% of those loans, because that has been an issue for clients, and banks have credit processes to run through, and that has meant delay in getting the loans agreed. So that's an encouraging development. Other than that, obviously health and safety has been a major concern, and we've been working, colleagues have been working with a number of industry bodies and specific clients who have continued to work through this time in terms of a health and safety best practice, their legal requirements, directors' duties, risk assessments, etc., where those are needed. And that's going to be, I suppose, a key issue for manufacturing as manufacturing businesses start to come back online over the next weeks and months. So that's a sort of a high-level view for me. We have a sort of coronavirus legal hub on our website that has some useful guidance for anyone who is wanting to look at any of these issues in more detail, and all of our contact details are on the slide as well. So feel free to reach out at any point if anyone has any questions, even outside of this webinar. So
Thanks.
to you, Kirsty, in terms of questions.
Thanks, Andrew. I'm conscious of time, but there is a question for Anna, and I know people have put questions through, so we will follow up with you on email. But Anna, what is the position with an employee who moves from furlough to maternity during the lockdown? Anna, I'm not sure if you're there. Okay, well, look, what we'll do is we will follow up with Anna. Can you hear us?
So I'm having problems with my video unmuting. Kirsty, would you take the detail of whoever's asked the question?
Yes, absolutely. No, happy to do that. I know there's a few questions that have come through, and again, all of the speakers, I'm sure, are very happy to pick up any questions, and we'll share contact details. So I'll just draw this to a close. So can again thank our sponsors, Tughans, for your support today, and our 5 speakers, to Tej, to Stephen, James, Anna and Andrew. I really hope you found this useful. We're obviously keen to hear your feedback and your views for future webinars. And thanks again to everyone who attended today, and can I hope you and your family stay safe and have a lovely weekend. So thanks again for joining, and appreciate it. Take care.
You too.
Thank you.